Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast. This is episode number 20 and by episode number 20, we are in the top 10% of the podcasts in the world in terms of number of episodes released, and I'm really happy about that. And I'm not going to be in the top 10%, I want to be in the top 0.1% probably, but yes, we are also going to get there soon. But yeah, let's first discuss what is happening right now. Let's first discuss what has happened in the market in the previous week, because some interesting things have happened, and we are first of all going to discuss how the Reliance and HDFC Bank results have come and how they're going to affect the markets. Then we are also going to discuss how the retail sales data that has come from the US is indicating again that the Fed's 50 basis point rate cut that happened in September was a mistake. And then we are also going to discuss some other things like how NSE has finally announced how much they are going to change the lot size for different indices, for different FNO contract of indices. And then I'm also going to tell you one thing which has not been discussed a lot as of now, and that is what were the comments that the RBI Governor Shakti Kanta Das gave in the India Credit Forum, because these are some important comments. When I read them, I found them important. So I think it is important that we discuss them in today's episode. And then I'm also going to talk about what are the events that you need to look forward to in the market in the next week, which are going to be very important and which are going to affect the markets. Okay, after that, and we are also going to discuss a very interesting IPO which is linked to a very interesting company in the stock market. So definitely this episode is going to be pretty interesting, so do watch it till the end, because it is going to be filled with a lot of different insights which can be very helpful to you. But yes, without any further delay, let's just start with the podcast. So let's first start with what happened in the previous week. And on Monday, we had the Reliance Industries results. So the results came out pretty in line with the market, nothing really out of the blue or nothing really out of line for the Reliance results. But now, one thing that Reliance has announced is the record date for bonus shares. So if you want the bonus shares of Reliance Industries, by when should you get the shares of Reliance Industries, or by when should you buy the shares of Reliance Industries so that you are eligible to get the bonus shares of Reliance Industries? So, and the record date that has been announced is October 28th. So does that mean should you get the shares by October 20th? No. A lot of people think that if the record date is October 28th for bonus share, that means they can buy Reliance Industries, the shares of Reliance Industries up till October 20th, and they will be eligible. But that is a big mistake. You should not do that. Rather, you should buy the shares of Reliance Industries by last till October 25th. Okay, so the last date at which if you buy the shares of Reliance Industries you will be eligible for the bonus shares is October 25th. After that, if you buy the shares of Reliance Industries, you will not be eligible for the bonus shares. So keep that in mind. Please do not make the mistake of buying the shares afterwards and then thinking that, okay, why haven't the bonus shares been allotted to me or anything. Okay, so October 25th is the last date. Please do not make the mistake of buying shares after that and then thinking why have the shares not been credited to your account. Okay, so I hope you guys understand that. But yes, after that, on Thursday we had the retail sales data from the US retail sales data, and the retail sales as well as the core retail sales have come out higher than expected. Retail sales coming out at 0.4% with the expectations when the expectations were of 0.3%, and core retail sales coming out at 0.5% when the expectations were of just 0.1%. Now, this means that the consumer is spending more. Now, if the consumer is spending more and if you're also cutting rates at the same time, that means inflation will come back again. And that is what I think is a problematic thing for the Fed right now, is that if the Fed is cutting rates when the consumer is still showing strength, okay, that will mean that that the inflation can spark back again, and we are already seeing that. If you remember the last CPI data that came out for the first time ever, I think in like 1.5 years or something, on a month over month basis, CPI came out positive. I think it was core CPI or CPI, I don't remember, but what I want you to tell is that the CPI progress, the progress of taking CPI down or bringing CPI down has already stalled. Okay, CPI is not coming down as fast as everybody is thinking. And if at that time you're cutting rates by 50 basis points, and then the retail sales data is also coming in better than expected, this will mean that inflation can spark back up again. So keep that in mind, and this is telling us that the inflation data in the next coming few months may not be as good as everybody is expecting them to be, and the Fed might not cut rates by as much as everybody is expecting. So I think as of now, the market is expecting like 100 basis points of rate cut in the next few months. I think in the next calendar year, you can say. So that may not happen. Fed might also need to hike rates. As absurd as that sounds, the Fed might also need to hike rates over here. But that is something that I will discuss in the next coming few episodes once I get a proper confirmation of that thing. Once the data confirms that thing, that is when I will discuss how the Fed might also need to hike rates over here rather than decrease rates. Okay, so keep that in mind. After that, we had the HDFC Bank results, which came on Saturday. So the results were better than expected. In particular, the profit after tax was higher than expected. Everything else was pretty much in line or a little bit better than expected, be it revenue, be it net interest margins, or be it net interest income. So one thing that I want to say is that the NPA, the non-performing assets, right? They were up a little bit in both quarter-on-quarter terms and in YOY terms also, year-on-year terms also. So NPA was up at 1.36%, right? And in the previous quarter, NPA was at 1.33%. And in the previous year, in the same quarter, NPA was at 1.34%. So NPA has slightly increased, although the increase is not something which is worrisome in any way. It is just a 0.02% increase. And yeah, definitely any increase in NPA is bad, but this type of increase is not really bad. It is not problematic at all. And at the same time, HDFC Bank has also announced some more things about the HDFC Bank Financial Services IPO. So what HDFC Bank Financial Services is, it is a subsidiary of HDFC Bank, okay? And if you remember a few months ago, I think in July, HDFC Bank announced that they will be bringing out an IPO of HDFC Bank Financial Services because RBI made it mandatory for NBFCs like HDFC Bank Financial Services, which is an upper layer NBFC in India. Now, I'm not going to go into the definition of what is an upper layer NBFC, but what you need to understand is that big NBFCs like HDFC Bank Financial Services needed to be listed. They had to be listed at last by September 2025. That was the deadline given by RBI. So HDFC Bank announced that they will be listing HDFC Bank Financial Services soon, probably by the end of this financial year. So that means probably by the end of March is when they will be listing HDFC Bank Financial Services. So what they did was that they announced the size of the IPO, and the size of the IPO was announced at 12,500 crores. And out of those 12,500 crores, 10,000 crores of shares will be sold by HDFC Bank, which is the parent company, and 2,500 crores will be fresh issue. That means the company will raise an extra 2,500 crores for itself, and and the rest 10,000 crores will be the shares that will be sold by HDFC Bank. And why? You'll be like, okay, this is not such a great thing, right? If if a majority of the proceeds of the IPO will go to HDFC Bank, this is not a great thing. But you have to understand that if 10,000 crores is going to HDFC Bank. Any HDFC Bank holder right now will be benefiting from this, right? If you're an HDFC Bank holder, that means your bank will profit from this IPO over here, right? Your bank will get some extra cash that it can use to lend out somewhere else, right? And this extra cash is coming with no cost, right? HDFC Bank doesn't has to, HDFC Bank is not like it doesn't has to give any sort of interest on these 10,000 crores, right? So this is a good thing for HDFC Bank over here. So if you think that this is a bad thing, that majority of the proceeds of the IPO are going to go to the parent company and they are not going to stay with the the company which has the IPO itself, which is going for the IPO itself, then it is not such a bad thing as much as you might think it is. It is not such a bad thing. If it would have been very bad thing if HDFC Bank hypes up the IPO and it makes it a very expensive IPO. Now we don't know the price band as of now. That will be announced probably near the IPO when the IPO dates are also finalized. But if the HDFC Bank decides to unload their shares at a very expensive price, then it is a bad thing, and then it will also create a bad reputation for HDFC Bank as well as HDFC Bank Financial Services IPO. But that is something that we cannot decide as of now. So that is the thing about HDFC Bank Financial Services. I hope you guys understood that. But there was also one more change, a few more things that happened after that. On Saturday itself, NSE has announced finally the new lot sizes. Now, if you remember, a few weeks ago, SEBI had finally announced the changes that they were bringing into the derivatives market, and one of those changes was increasing the minimum contract size from 5 lakh to 15 lakhs, right? So everybody was expecting that, even including me was expecting that the lot size of option of FNO contracts would be increased by 3x on all for all indices, right? But that is actually not the case, because Nifty's lot size definitely has increased from 25 to 75, which is a 3x increment. But if you look at Bank Nifty's lot size has gone from 15 to only 30, which is a 2x increment. I am happy about that, but still, given the fact that Bank Nifty's weekly expiry is going away, I don't know what I will do. I am probably might shift to forex trading, but that is something which I need to decide as of now. I'm not really sure as to what I would do. But yes, Fin Nifty's lot size has been increased from 25 to 65, a rather unusual number, but can't do anything about that. Mid-cap Nifty's lot size has been increased from 50 to 120, and Nifty Next 50, if you remember, Nifty had also launched FNO contracts for Nifty Next 50 index, and they have been increased from 10 to 25. So overall, if you see, only Nifty's lot size has been increased by 3x. All other indices have seen incremental lot sizes, but not up till 3 times lesser than that. So yeah, that is it for Nifty. And in the end, one last thing that happened in this week was that RBI governor was actually a speaker at the India Credit Forum, which was held on Saturday. And what RBI governor said, now I was expecting that nothing really important would be said in the meeting, but one important thing that RBI governor said, that we are certainly not behind the curve, and rate cuts at this stage are very premature. They can be risky. And one more thing that he said, that rate cuts will only be they will think about rate cuts only when RBI has the confidence that inflation has durably aligned to RBI's target. Now, a lot of people were expecting in this RBI meeting itself that RBI will cut rates. That did not happen. However, they did change their stance from withdrawal of accommodation to neutral. But a lot of people are also expecting that in the December meeting of RBI, we will see a rate cut. But this, what RBI governor has said in the India Credit Forum, might not be such a great news for those people, because anybody who was expecting that RBI will cut rates in December, they might be disappointed, because inflation is still pretty high as of now. Definitely inflation did come down below the RBI's target of 4%, but it has again went above. In the latest CPI readings, RBI inflation has again gone above 5%. But if inflation continues to creep down in the coming few months, maybe we might as well see a rate cut in December. But in my opinion, if uh, if you go by the comments that the RBI governor has given in the India Credit Forum, it looks like we might not see a rate cut in December. So at one point, or you can say in at one side you have good HDFC Bank results, right? And at the other end you have bad, not bad, but sort of disappointing comments from the RBI governor. So what will happen is that banks might be a bit of a mixed bag on Monday. So what you need to do is look at how the market is reacting in the first 30 to 1 hour, okay, in the first 30 minutes to 1 hour in the morning, how bank nifty is reacting in the first 30 minutes to 1 hour, and that will tell you where banks are heading. Because as I said, that HDFC Bank results are definitely good, and HDFC Bank most probably will open positively only. But on the other hand, other banks might not open so positively, given the fact that RBI's comments might disappoint, especially the banking stock investors, right? So what you need to do is look at how bank nifty is performing in the first 30 minutes to 1 hour of Monday. Okay, so that is something that we'll discuss in the market analysis part of the video also. But that is it for what happened in the previous week. As I said, a lot of things have happened, but I hope you guys understood what have happened. These were the important things, and these are the things that will definitely affect the market, or that have affected the market in the previous week. Now let's move on to what will happen in the next week and what are the major events that you should definitely keep an eye out for. Now, nothing really important happening in the next week except for one thing, and that is the RBI MPC meeting minutes on Wednesday. So, what is this? RBI's MPC is the Monetary Policy Committee, which decides should you increase the interest rate, should you decrease the interest rate, should we increase the liquidity in the system, should we decrease the liquidity in the system, and all that stuff. So, they will release the meeting minutes on Wednesday, and that will be after market at 5 p.m. Now this will be interesting to watch. As of now, it is not really as important of an event, but what RBI governor said on Saturday in the India Credit Forum about interest rates and rate cuts, if that same thing comes out on Wednesday also in the MPC meeting minutes, right? Where the MPC members say that rate cuts as of now would be premature and they can be risky, then that would also put a bit more pressure on Bank Nifty. And because a lot of people who were expecting rate cuts in December will be a bit disappointed, because of which Bank Nifty might underperform a bit. Okay, so after that, we don't really have anything important in the markets which you need to keep an eye out for as of now. But if there is something important, if there is something important that happens in the week, between the week, which we don't know about, or which happens out of the blue, like NSE changing lot sizes or something like that, right? Which we don't already know about, then we will definitely discuss it in the next week's episode. But yeah, that is it for the next week. Now let's move on to the IPOs that are coming in our markets next week, because there is one very interesting IPO coming in our markets, and I'll tell you if you should apply to that IPO or not. Now there are four IPOs coming in our markets next week, or you can say starting in our markets next week, but I'm only going to talk about three of them this week, and the next one, the last one, which is going to open on Friday, that I will talk about in the next week's episode, because as of now we don't have a lot of information about that IPO. But out of the three IPOs that we're going to talk about today, first of all, let's talk about the most interesting one, and that will be the Waaree Energies Limited IPO. Now, if you remember, Waaree Renewables Technology Limited, which was a stock which is very popular with the retailers. The stock rallied crazily in from, you can say, like December 2023 to like for the next few months, and just 10x in no time, right? And it was a very speculative stock, and a lot of people traded in it and all that stuff. So it is a very popular stock, a popular meme stock of India, Waaree Renewables, right? So its parent company, Waaree Energies Limited, is launching a 4,300 crore IPO. And this IPO will open on Monday, that is October 21st, and will go on till October 23rd. So out of these 4,300 crore, 3,600 crores will go to the promoters of the company who are selling their shares, and only 720 crores will go to the company itself. Now, as much as you would like to say that Waaree Renewables is a bad stock, it is a very speculative stock, it doesn't has fundamentals and all that stuff, Waaree Energies is not so bad in terms of fundamentals, and I'm going to come to that in just a second. But let's first talk about the GMP, or should you apply to this IPO for listing gains? And the answer is a very, very solid yes, because the GMP as of now is going on at 97%. So definitely you should apply to this IPO for listing gains. I think this is a very good IPO. If you want to apply for listing gains, you will get very good listing gains. So that is out of the way. But should you apply in this IPO for investment purposes? Should you invest in this company by applying in the IPO? And the answer to that question is also a simple yes. But let's go into a bit in depth and look at how is the company for performing, what are the future prospects. So if you see over here, first of all, the revenues, we'll talk about the financials of the company, and then we'll also go on to different aspects. If you see the revenues over here, in FY22 the revenue was at 2,900 crores. In FY23 the revenue jumped to 6,800 crores, and in FY24 the revenue jumped to 11,600 crores. So a more than, you can say, 100% jump in both the years, in the last two financial years. So definitely an amazing company in terms of revenues, in terms of financials. And the same you can also see in the profit after tax figures, not just revenue figures, where actually profit after tax has seen a much bigger jump. If you see, in FY22 profit after tax was just 79 crores, but in FY23 that jumped to 500 crores, more than a 5x jump over there. And in FY24 that went up till 1274 crores. This is indicating that the company's net profit margins, so basically efficiency, is increasing at a very good pace over here. So just by looking at this, it is evident that the company is good, and I think you should definitely apply to this IPO. The company is the largest solar PV module maker of India. So again, as I said, that it is getting a good preference from a lot, from basically the whole solar industry of India. You can say the solar, solar panel industry, or whatever you want to call it. It is at the forefront of that industry. So a very, very good, you can say, company in general. Even in terms of how it is performing right now and what are the future prospects. And one of the things is that the government is also supporting the solar industry with various schemes. So that is also one of the very good things which is going to help the company grow even forward in the coming few months, right? In terms of how is the IPO priced, given the price band, the IPO is priced fairly. It is not really very expensive also, and it is not really very cheap also. Okay, it is priced fairly, a bit on the higher side in my opinion, but it is fine. It is not bad given the fact that the company is growing at such a fast pace. I think it is fine given that fact. So should you apply to this IPO? Yes. Now, one thing that I would like to say is that if you do get allotted to this IPO and you do get this IPO, please just trim a little bit of your position. right? So if you're holding, so if you, let's say, apply for one lot, right, which is 15,000 rupees, and you get the shares worth 15,000 rupees, you will already be seeing a profit of 15,000 rupees, right? An estimated profit of 15,000 rupees on the listing date, because the gray market premium is suggesting a 97% gain, right? So you'll already be seeing a profit of around about 30,000. So what I would say is just trim a little bit of your position. If you're don't hold the 30,000, like all of your shares, right? So you're going to get 9 shares, right? The lot size is 9 shares. So out of the 9 shares, at least book like 3 shares and let the rest 6 shares stay in the long term, right? If the IPO starts to correct and if the stock starts to correct and starts to come down, then add on to shares even more, okay? Because if if the IPO gets listed at 100% higher price than the price band, then the company becomes a bit expensive, and then there are chances that you might see a little bit of correction in the stock. So that's why I'm saying is that trim a little bit. So basically sell a part of your shares and let the majority part stay in your portfolio for the long term. Definitely a good company, and you should definitely apply to this IPO even if you are thinking about fundamentally investing in the company. So, and that is out of the way. Now let's move on to the other IPO, and that is Deepak Builders and Engineers India Limited. So this is, I think you can already understand what the company is by the name. So this is I'm really sorry. This is a construction company which specializes in making buildings and various types of projects, like you can say stadiums, or you can say residential complexes, or hospitals and all that stuff, right? You get my point, right? Not just normal buildings, not just normal residential buildings, but as I said, like hospitals or institutional buildings, like right, like a college, or as I said, like a stadium also, right? So the company specializes in making these types of buildings, and it also has some other projects like it also has it hands in some other projects like you can say uh, medical gas pipelinings, landscaping, which is basically turning the land and using it for some other purpose. Like, actually, that is not the case, but like by landscaping, what I mean is that you want to turn a barren land into, let's say, a forest. No, not a forest, but a garden, right? So that is a bit of landscaping for you. So that is what landscaping is, turning the land into you can say something else, right? As I said, turning a barren land into a garden, that is landscaping, or turning a hill into a flat surface, that is also landscaping. So I hope you guys understood that. So the company also has projects like these. So that is out of the way. Okay, I hope you guys understood what the company does. But if you see, the revenues of the company have been growing steadily. They have not been growing at a extremely fast pace. But if you see, in FY22, the revenues were at 364 crore. In FY23, they jumped on to 435 crores. And in FY24, they jumped on to 516 crores. So steady growth, not very slow growth, but at the same time, not a very fast growth also. And at the same time, if you see profit after tax also jumping at a faster pace actually as compared to revenues. Because if you see, profit after tax in FY22 was 17 crores, right? In FY23 it went up till 21 crores, but in FY24 it went up till 60.4 crores. Now this might be a one time jump, because if you think about it, in infrastructure, your net profit margins don't all of a sudden go up in 1 year, right? So this might be a one-time thing, and maybe the profits might again start to deteriorate in the coming few years. In the coming financial year. But I would say, you know what, just look at what is happening. Let's not try to go too much in the future. So a good financials, but nothing out of the blue, or nothing outstanding, you can say, which we can see over here. At the same time, if you see over here, what you have to look at is that it has an order book of 1380 crores, which is It is good, but I would not say it is very, very good because a lot of companies, infrastructure companies, have a much bigger order book as compared to their revenues, right? So the company doesn't has a very big order book, and it also has some litigations. So what I would say is that if I think you should not run for this IPO. If you want to apply to this IPO, don't run for it. In terms of if you want to apply it on a fundamental basis for investment, I think there are other companies which are better poised, which are better in terms of builders, basically infrastructure builders, or you can say all that stuff, right? I think there are other companies which you can apply to. So if you don't apply to this IPO, that is fine. In my opinion, you won't really miss out on anything. If you have a very big portfolio, like let's say 10 lakhs or like 15 lakhs, 20 lakhs, and then you apply for one lot or two lots, then I think it is a fine thing. So giving this company a very small percentage of your portfolio is fine, but in my opinion, you should not like give it a very substantial percentage of your portfolio. So even if you skip this IPO in terms of investing in the company, it is fine. One more thing that I didn't talk about is the GMP. Should you apply in this IPO for listing gains only? And the answer as of now is no, because the listing gain the gray market premium as of now is going on at 29%. But what I would like to say is that if by the end of this IPO, okay, just a second, I forgot when. Just a second. Yeah, if by October 23rd, right, by the end, if the GMP goes above 40%, then you can definitely think about applying in this IPO. So I hope you guys understand that for listing gains, okay? But yes, if the GMP stays near 30%, I would say don't apply for this IPO even for listing gains, because sometimes the IPOs which have like 30% listing gain going for them also open flat or even sometimes negative. So that's why I say is that wait for the GMP to go above 40%. If by the last day of the IPO the GMP goes above 40%, then you should think about applying in this IPO for listing gains. But aside from that, don't apply in this IPO for listing gains. Now let's move on to the last company for today, and that is Godavari Biorefineries. And this company is launching a 554 crore IPO, out of which 325 crores will go to the promoters of the company and 229 crores will go to the company. So the company is raising 229 crores for itself, and 329 crores will go to the promoters who are selling their shares. So this company, what it does is that I actually forgot, it is a bit complicated for me, but this company basically makes ethanol based chemicals. So that might be various types of sugars or various types of ethanols also, sometimes of bio based chemicals also. So I myself am a bit confused, so but still I can understand that it has a very, very good hold in the ethanol sector of India. Now ethanol is an up and coming, you can say, chemical. I wouldn't say it is a chemical, but something which is going to see a very good demand in the coming years, because government has started ethanol blending in fuel, right? If you remember, right? So this company is actually the largest producer of MPO in the world. Now this is some type of a chemical which I tried to find what it is. I tried to understand what the uses are, but I really could not, to be very honest. But this company is the largest producer of MPO in the world, and as I said, that it makes various types of ethanol, sugars, bio-based chemicals, right? And it has some very, you can say, very big clients like Hershey's India, basically the Hershey's arm of India, which makes chocolates in India. And then it also has Hindustan Coca-Cola Beverages Private Limited and many other like big companies like this, which are its clients over there. So in my opinion, the future prospects of this company are good. Genuinely speaking, the company has good future prospects going for it. But one thing that you need to keep in mind is that how are the financials? If you see in FY22, the revenues were at 1700 crore. In FY2023, revenues jumped to 2023 crores. But in FY24, revenues again went down to 1700 crores. Why was this? Is because the government banned ethanol production. If you see, I don't remember when was the exact date, but I think it was somewhere in FY23 itself, and because of which I think near the end of near the end of FY23, if I'm not wrong. So somewhere in that time, I'm really sorry if I'm getting the timeline wrong, but yes, the government banned ethanol production, because of which the company had to face such a big setback. And also there were a few natural calamities because of which the company saw such a good dip in the revenues, right? And because of that, if you see, the same thing happened in profit after tax also, where the profit after tax was 19 crores in FY22. In FY23 also it stayed at 19.6 crores, and in FY24 it went down till 12 crores. So one thing that I don't like about this company is the net profit margins. The net profit margins of this company are not good at all. If you are just saving 19 crores out of 1700 crores of revenue, that is not good. Just 1% net profit margin is not good at all, because that would mean that any sort of a any sort of a, you can say, like, unexpected loss, if the company sees it, its net profit can easily turn into a net loss also. So that is why it is a bit of a problematic thing for the company. Now, what I would say is that since the company still has good bright prospects ahead of it, if you are going to apply in this company for on a fundamental basis, don't give it a very big part of your portfolio. So okay, so as I said, same thing as the previous company. If your portfolio is of 15 lakh, 20 lakh, or 10 lakh, and all that stuff, and then you're applying for one or two lots to give it a very small part of your portfolio, that is fine. But if your portfolio is small and if let's say 15,000 worth of shares become a very substantial part of your portfolio, don't apply in this IPO. Okay, from an investment perspective, I'm saying. Okay, so if, as I said, that if you're ready to give it a small part of your portfolio, that is fine, but don't give it a big part of your portfolio, at least as of now. If the revenues, if the net profit margin starts improving, the net profit numbers start improving in the coming few quarters, then think about investing. It is fine. We will buy at a bit of a higher price, that is fine, but don't run for an investment. As I always say, don't run in the market, because the more you run behind something, it will go much farther and you will face much more pain and problems in acquiring it. But if you stay at your place and let things come to you, then things become much more easier for you. So I hope you guys understood that. But should you apply in this IPO from a gray market, from listing gains perspective? So as of now, the answer is I don't know actually, because the listing gain is still showing me as 0 rupees. Looks like the listing gain is still not out, or there is no listing gain as of now. But if by the end of the last day of the IPO, okay, which is going to be October 25th. If by October 25th the gray market premium goes above 40% or is above 40%, then you can think about applying in this IPO for listing gains, or else don't even apply for listing gains. I hope you guys understood that. But yes, with this we come to an end to all the IPOs that are coming in our markets. As I said, there is one more IPO, which is Afcon's infrastructure, which is coming out on October 25th, which is going to be Friday. But that I will cover in the next episode of the podcast, not right now. So I hope you guys understood what you have to do with all the IPOs that are coming in our markets which are coming in our markets this week. But now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, APC Bank Nifty has closed with a very good green candle, and as I had said that in the previous week that if we get a green candle, that is when we will think about going bullish on the market. And Bank Nifty has closed with a very good green candle. Nifty not so much. Okay, Nifty, if you see, hasn't closed with a green candle, rather has closed with a red candle in a consolidating way. So Nifty pretty much consolidated between this range, tried to break it on Friday but recovered again. And Bank Nifty, if you see, just looking pretty bullish, and it will, I think, continue to be bullish given the fact that HDFC Bank results are good, right? So the way, first of all, Bank Nifty has made this pattern, it looks like Bank Nifty can again try to go near the all-time high. And yes, I know this sounds pretty absurd as of now, that Bank Nifty would again go till all-time high, but the way this pattern has been made, I am getting a feeling that Bank Nifty will go till the all-time high over here, because what is happening over here is that Bank Nifty tried to go down over here, could not, and the way this rejection has happened is indicating that a lot of buyers are ready to enter and take Bank Nifty up over here. And also, as I said, that if HDFC Bank results are actually good and the market perceives them to be good and the market reacts in a good way, you will definitely see Bank Nifty outperforming over here under a big way, because HDFC Bank, when it starts to move, it will blast Bank Nifty. It will just take Bank Nifty up with itself. So that is one thing. Talking about Nifty, on the other hand, Nifty is a bit weak over here. Also, given the fact that Reliance hasn't been doing so well. Actually, okay, this is Reliance's uh, US stocks or UK listed stocks. But yes, anyways, Reliance hasn't been doing so well. But if one more thing that you need to look out for is that one thing that is a principle that I follow is that whenever the market has to give a very big move on the upside, right? Whenever the market has to start a very big move on the upside, it will first trap a lot of people on the opposite side. So if you see over here, a lot of people would have seen this head and shoulders pattern over here, right? Which is a bearish pattern for the market. If you see, a lot of people must have seen this, and a lot of people must have also taken an entry over here, right? Either on Thursday or on Friday. But because a lot of people are seeing the same pattern, and if Nifty actually traps all of those people at lower levels, you will see a very, very good recovery in Nifty also, because a lot of sellers have been trapped over here, and this means that a start of a new rally on the upside can be seen in the next week over here. And when will we get this confirmation is above this candle. All we need is a closing about 25,000 in Nifty for one day, and it will be confirmed, and then Nifty can move on the upside, at least go and fill this gap over here on the upside till 25,800, and then maybe take rejection from there or do something, but at least we can see this move on the upside. And for Bank Nifty, as I said, that if HDFC Bank results are good for the market, Bank Nifty will not take a lot of time to move on the upside. First of all, till 53,200 on the upside, and then easily till 54,500 also. Please do not think that this is a very big thing for Bank Nifty. If you see over here, it is just 4% away, and for Bank Nifty 4% is actually not such a big thing when HDFC Bank starts to move. So all you need to do right now is buy on dips, and the first level for buy on dips will be 51,800 to 600, right? This area, if Bank Nifty comes over here, you can take a very good move trade over here and start to take a bullish trade for on a positional basis also, for the first target of 53,000 and the second target of 54,500 also on the upside. Okay, so however, if you don't get that tip and we open with a gap up, let's say somewhere near 52, 600, 500, all these levels, because if HDFC Bank results are good, opening 1% up for Bank Nifty will not be such a big deal on Monday. So if you open with that such a big gap up, again, please do not rush to take a bullish trade. What you need to do is wait for any sort of negative price action. Now, whenever HDFC Bank results are good and we open with a gap up, what happens is that we continue to move on the upside without filling the gap. Okay, and if that happens, what you need to do is look for any sort of a seller trap, like if Bank Nifty starts to make a lower low, and if that happens, all you need to do is wait for a reversal of a higher high being made. And as soon as a higher high starts to being made and a lot of sellers are trapped, maybe by breaking the day low, breaking the low of the first 15 minutes candle in bank nifty. If bank nifty breaks the low of the first 15-minute candle and a lot of sellers start to enter, and if then bank nifty starts to make a higher high after that, that is when you need to take a bullish trade, and then you can expect the market to continue to move on the upside. Because as I said, that if HDFC Bank results are good and if HDFC Bank is very bullish, bank nifty will not come down to fill its gap. Rather, it will continue to move on the upside. And talking about nifty over here, and just in case, even if bank nifty is actually not bank nifty but HDFC Bank results are bad, as I said, that this area will be a very good place to take a long position. And one more thing that you need to keep in mind is that the data over here has started to turn positive over here. By positive, I mean pros over here have started to go positive. If you see, they have definitely reduced a bit of their index future long positions. But if you see over here, they've heavily covered their call shorts, they've heavily covered their put longs, and they've also come into put shorts, which means that they are coming into bullish position. And if this continues on Monday, then you will definitely see more support, especially in bank nifty. Okay, so even if you open with a gap down over here, given the fact that bank nifty is, maybe the market doesn't perceive bank nifty's results to be as good, then 50 and 800 to 600 will be the first area where you think about taking a long position. If that area is not held, then again 50 and 200 to 50 and 1000 is a very good place to take a long position over here, right? As of now, it doesn't look like market will go and make a new low. Okay, even if that happens, we will get the hints in the data and we will then plan accordingly. But as of now, it doesn't look like the market wants to go and make a new low over here, right? That is for bank nifty. Now for nifty, as I said, that if the market now if you see, it has trapped a lot of sellers over here, right? And if nifty closes about 25,000 for one single day, okay, all we need is a closing about 25,000 and you will see a very good sharp recovery over here, at least till 25,800 on the upside. Because the market will trap a lot of sellers over here at lower levels, and then the market can move on the upside, and this can be a pretty sharp rally on the upside. I hope you guys understand that, right? And then if market continues to sustain over here, probably we might even see a new all-time high being made in the few days after that. So I hope you guys understand how the market can move in the coming week. Now things might change in between the week, right? Something might happen which might change how the markets are moving or how the markets were supposed to move. So for that, do follow me. So do look at my daily market analysis videos on my YouTube channel, because they will because if anything changes on a day-to-day basis, you will get to know that. And anyways, you will get a daily view of how the market can move in the coming day. Okay, so I hope you guys understood that, and this was how the market can move in the coming week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys understood some new concepts from this episode, or I hope you guys got some new insights from this episode which will help you in the markets in the coming week. But yeah, I really appreciate that you waited till the end, or you listened till the end, or you watched the episode till the end. But yeah, if you have any sort of suggestions that you have for the podcast, do let me know in the comments, or do DM me on Instagram also. I will definitely make sure that if I can make those changes, I will make those changes. But yeah, that was it for this week, and I will see you guys in another episode in another week. Bye bye.